Welcome back, everyone. We got some great information, great presentation to do as always. And welcome back, Julie, my co-host. How are you, Julie?
Good morning, Seewing. I'm fine. How are you?
Fine, thank you so much. So we got a lot of things to cover, Julie. So without further ado, let's start with this particular headline right here. So what if I told you the American dream has shifted and you are either renting it or profiting from it as a landlord? So, with housing costs soaring and big investors turning neighborhoods into luxury rental hubs, the rules of wealth are being rewritten. The question is, will you adapt or be left behind? Yeah, that's food for thought for sure.
Mhm.
As always, Julie, I'm always value your input because you're a late starter in your real estate investment journey, but you wrap it up quite quickly 4 years ago. You have a nice portfolio of investment properties out of stake. So you are going through your great journey. Anyway, so with that said, why a renter's economy would be devastating for those people, especially those people continue renting. Now, look at the mainstream media going to paint the picture that, the cost of renting is cheaper than the cost of owning a property, whether it's a primary home or investment home. But you have to be careful what the news media, the mainstream media, or the fake gurus are trying to distort, mislead you into thinking renting is great. But let me give you an example, Julie. 30 years ago, back in 1995, a price of a home, for our example, is $100,000. At that time, rent was $400 per month. Okay, it's all about inflation, right? Inflation is a silent killer.
Yes. Uh-huh.
Wow. Inflation, I repeat again, inflation is a silent wealth killer. That means if you do not invest in assets that is a hedge against inflation, you will be financially falling behind. This is an example of a home back 30 years ago from today with 100 grand. If you were an investor, you bought this particular home 30 years ago, 1995 at 100 grand, and you're charging rent for $400 as a landlord, ever renting your home for $400 will pretty much pay off your monthly mortgage, insurance, taxes, insurance, or whatever. You can achieve the so-called, the magical positive cash flow, right? So
Right.
landlord versus renter. So choose which side of the fence you wish to be on. 30 years later, we fast forward to 2025, upcoming 2025, how time flies. That house, if a person would have bought the house as an investor or as a primary home and whatever, it would be valued at 30 years later today at $500,000. And the rent have gone up. The people pay rent equal to the inflation. Okay.
Right.
Inflation, the market rent for this house is $1950. So as a landlord, had you purchased this house 30 years ago, now with a 30-year mortgage, then you're free and clear. You own the house, the same house for $500K, no more mortgage, and you charge rent around $1950. So you're receiving monthly cash flow of a little bit less than $1950. So as an investor landlord, but if you're a renter, if you continue to rent for the past 30 years, your rent will increase from $400 to almost $2,000.
Yes. That makes sense.
I'm going to take it one step further, Julie, and then I'm going to have you input. So fast forward 30 years from now, almost 30 years from now, the year 2054, due to the law of compound interest, due to the long-term wealth building, long-term increasing value of a house on a historical basis, at let's say 3 to 5% appreciation rate, long-term, that house 30 years from now, that $500K house will become, let's say, $1.5 million.
Wow.
If you continue to own that house, or maybe not you as an owner, maybe your heirs that inherit the property, and the heirs continue to as a legacy transfer, your heirs gonna inherit the property and continue to make it this as a rental property, the real property will grow 3 times over the next 30 years at 1.5 billion free and clear.
Yes.
Okay? When the heirs inherit your property upon passing, your heir will not pay any capital gains tax. Okay.
Wow.
And then, is that amazing?
That's very realistic too. Yeah. Very realistic. Yeah.
My numbers are very realistic. Furthermore, if you and your heir, the next generation, continue to own the home from 1995 to 2054, we're talking 60 years, right? So,
right.
If you buy a brand new home 30 years ago, 1995, 60 years later, that home's still pretty good condition, as presumably you take care of the house, right?
Yeah.
So you buy brand new 1995, 60 years later, the year 2054, your home is only 60 years old. And
right.
At that time, as a landlord, you're charging almost $10,000 monthly rent.
Yeah. On a home that's pretty clear.
Yeah, that's right. So look, on a historical basis, the ratio of homeowners versus a renter is drastic. Okay. So don't let anybody fool you. The American dream is owning a home.
Right.
Anybody or any real estate guru to try to tell you, renting or any of those mainstream channels, CNBC or ABC, whatever, tell you, renting is a lot cheaper than owning a home due to the affordability crisis we're having. Yes, I agree. Not everybody can afford to buy a home at any moment, right? Because there are like 60% homeowner and 40% renters in the US. That's on a historical basis. Imagine if you're a renter, okay, and for years, for the next 60 years, you're paying $400 rent. Then 30 years later, you'll continue to pay almost $2,000 rent. You make the landlord rich. And then 30 years after that, you pay for $9,500. It does not make financial sense. You're always going to be, you're losing out on an American dream. So, even the difference between the renter and a homeowner, given this 60-year timeline, what do you take away from this short presentation?
I think that's very realistic. Now, and it's so interesting because that's about the length of time that the house that I live in, we've owned it. We've had that in our family for 57 years. And the numbers are very realistic. Actually, it originally started out at 30,000. Now it's over worth $1 million, not quite 60 years we've been here. The numbers are realistic. It makes a good point. It provides a great generational legacy for the next generation. And you have all this income coming in, not tax-free, but you have it mortgage-free, is what I'm trying to say. So that's a great example of what can take place if hang on to a property long enough.
Absolutely. So that's my takeaway as well, Julie. My takeaway is always short-term, maybe renting is cheaper, depending on where you live, I suppose. To own a home, because the US is such a large landscape. But at the end of the day, look at the long term. Look at your financial future. Yeah, ownership is the American dream. Will always beat being renting. So my final takeaway is each individual out there watching this video, you need to find a way you need to have financial goals. You need to find a way to make it qualify to buy a primary home or buy a rental property. And you just have this kind of mindset. Don't be renting forever. If you're renting, it's a losing proposition. Any final quick last minute takeaway, Julie?
I think it's something to think about. I was actually sitting here thinking this too about our own home. Might be a great rental. Yeah.
Okay. Very good. Okay. With that said, if you guys receive any value whatsoever from this short video presentation, please like and subscribe to my YouTube channel. And also put your email at the bottom of this description of this video on our website. You can put your email into this newsletter link. Once you've become a free member of our real estate investment network, so you can receive daily morning email free real estate investment newsletters about all aspects of real estate investing. Thank you so much.